Welcome back, everyone. Today, we're diving deep into a fascinating audio giant, putting it right under the microscope. We're going to unpack the Sonos Q2 2026 earnings, and we're taking what could just be, dry financial data and turning it into a really clear, structured analytical journey. Because in this explainer, we aren't just looking at the numbers. We're looking at the story those numbers actually tell about hardware, software, and real market resilience.
So here's our roadmap for today's explainer. First, the Sonos ecosystem. 2, target market and demographics. 3, the Q2 2026 financial pulse. 4, hardware versus software. 5, the competitive landscape. And finally, 6, the Wall Street stock outlook.
All right, part 1, the Sonos ecosystem, elevating life through sound. So before we can even begin to evaluate the stock or the market cap, we absolutely have to understand the foundation of the business, right? What does Sonos actually make, and how do their devices interconnect? Think about a visually striking living room setup. You don't see a giant tangle of wires or those clunky old receivers, do you? No. Sonos has built its entire identity on premium home audio integration. Their products are meticulously designed to just blend seamlessly right into a modern home, functioning together as one single connected platform. They aren't just selling you a speaker, they're selling a sleek, elevated lifestyle experience.
And, this vision is really splitting into two distinct paths. On one hand, you've got their traditional bread and butter, the home theater. Products like the Arc Ultra soundbar bring incredible sound to life for the most important seats in the house. But on the other hand, we're seeing a major strategic shift into personal audio. With the introduction of the Sonos Ace headphones, Sonos is actively pushing to take their highly regarded audio experience out of the living room entirely and out into the world.
Moving to part 2, target market and demographics. Who actually buys Sonos?
Now that we know what they build, we really need to understand exactly who is purchasing these premium devices and, funding this massive ecosystem. Well, looking at the data, the core demographic is super distinct. We're talking about individuals and families right in that 30 to 55 age range. Crucially, they possess a higher disposable income and are typically urban or suburban homeowners. These are your classic early adopters of technology who place a massive premium on audio quality and really sophisticated design. So the big takeaway here is that Sonos is essentially a premium brand catering to an affluent base. These are folks who want a highly connected, smart home lifestyle, but without the headache of complex wired setups.
All right, part 3, the Q2 2026 financial pulse, a return to growth. Let's shift gears for a second and look at the actual business performance from their May 2026 earnings call. This is a huge moment for the company because it marks a crucial recovery following a pretty rocky software reset back in 2024. The absolute key point is this number, $281.53 million. That's their Q2 revenue figure, and it represents an impressive 8.4% year-over-year growth. Look, in an economic environment where hardware sales can so easily stall out, posting nearly an 8.5% jump and beating expectations, that is a massive signal of real momentum.
Now, digging into the deeper valuation metrics, the company currently boasts a market cap of $1.75 billion. And yeah, they did post a net loss this quarter, resulting in an earnings per share of negative 24 cents, but you really have to look closely at that gross margin, 44.3%. That is incredibly strong. It shows significant business resilience because they actually managed to maintain this margin despite rising memory costs across the board. And impressively, they did it without having to resort to price hikes on their customers.
And this momentum is perfectly captured by CEO Tom Conrad. He noted during the earnings call, a return to growth driven by improved products, software, marketing, and expansion efforts. That quote really underscores management's confidence. They firmly believe they've successfully navigated the turnaround phase and are now actively expanding their footprint in the market.
Part 4, hardware versus software, the evolving business model.
Why this evolving model matters so much is because Sonos is quietly shifting its entire strategy. They aren't just simply selling physical speakers anymore. They are working incredibly hard to build a sticky, recurring revenue platform. When you look at the 2025 revenue split, about 65% comes from physical hardware sales, but a massive 35% is now coming from software and services. We're talking features like their TruePlay tuning, Sonos Radio, and other subscriptions that are fast becoming major margin-enhancing levers. It's that classic razor and blades evolution, right? Sell the premium hardware up front and then significantly boost the customer lifetime value through high-margin software services over the long haul.
Which leads us to part 5, the competitive landscape, a dual-threat reality.
Now, obviously, no company operates in a vacuum, and Sonos faces a really unique two-front squeeze in the highly competitive audio market. On one side, you have the heritage audio brands. Think companies like Bose, who are constantly contesting that premium, high-fidelity audiophile segment. But then, on the exact opposite side, you have the absolute behemoths, big tech smart ecosystems. These tech giants are pushing low-cost smart speakers practically at a loss, just to get consumers locked into their walled gardens. This dual-threat reality forces Sonos into a very delicate balancing act. They have to maintain ecosystem neutrality so their products work seamlessly with everything, all while aggressively defending their core high-end audio performance identity.
Finally, Part 6, Wall Street Stock Outlook, the Analyst Forecast for 2026.
So, how is Wall Street reacting to all of this? Well, looking at the analyst price targets over the next 12 months, the lowest target sits at $16.50, but the median target is all the way up at $19.50. If you do the math from the current price we discussed a little earlier, that median target represents a potential 32.9% upside.
And the consensus right now is actually quite bullish. Tracked analysts currently give Sonos 3 buy ratings, 1 hold rating, and notably 0 sell ratings. None. The highest target on the board comes from Steve Frankel at Rosenblatt, projecting a top target of $21. That reflects a lot of real belief in the company's continued recovery and their overall margin strength.
Which brings us to our final thought for this explainer. Look, the numbers are clearly moving in the right direction, and this shift toward a software-enhanced platform is really promising. But the ultimate question still remains: can Sonos actually maintain its premium edge while simultaneously expanding its software platform against the deep pockets of big tech? It is literally a high-wire act of hardware excellence and software integration. Thank you so much for joining me for this explainer. Keep analyzing, keep learning, and I will see you next time.